Hello everyone and welcome back to the Change Dude podcast. I'm your host Saeed Rafe, and today we are going on a deep dive into one of the most revolutionary shifts happening in the financial world. Decentralized finance or DeFi. Our episode is all about the future of money in a digital world. For many, the world of finance can seem daunting and impenetrable, full of technical jargons and complex systems. But over the past few years, we have witnessed the emergence of decentralized finance, which is a new paradigm that promises to democratize access to financial services, reduce reliance on traditional banks, and fundamentally transform how money moves in our digital age. In today's episode, we will explore the origins of DeFi, the core technologies that power it, its practical applications, the challenges it faces, and the future possibilities that could redefine our economic landscape. Whether you are a tech enthusiast, a finance professional, or just curious about what DeFi is all about, this episode will provide you with a comprehensive understanding of the subject. So without further ado, let's get started. I would like to begin by defining decentralized finance. At its simplest, DeFi refers to a movement within the cryptocurrency and blockchain space that seeks to create an open, permissionless, and transparent financial system. One that doesn't rely on traditional intermediaries like banks, brokers, or payment processors. Historically, our global financial system has been centralized. Banks, governments, and large financial institutions control money flow, credit, and payments. While these institutions provide stability, they also come with their own set of challenges. High fees, limited access for underbanked populations, and sometimes opaque decision-making processes. With DeFi, the concept is rooted in blockchain technology, which allows for a decentralized ledger maintained by a network of computers. Blockchain offers security, transparency, and immutability. These three qualities are essential for a modern, user-empowered financial system. This intro will be incomplete without talking a little bit about DeFi's history. DeFi's origin can be traced back to the introduction of Bitcoin in 2009, which brought the idea of a decentralized digital currency to life. However, Bitcoin's primary function was as a store of value and a medium of exchange, not a full-fledged financial system. The real breakthrough came with Ethereum, which launched in 2015. Ethereum introduced smart contracts, which are self-executing contracts with the terms of the agreement directly written into code. This innovation opened the door to a whole new world of decentralized applications, including those in the financial sector. Since then, we have seen an explosion of projects in the DeFi space. Platforms like MakerDAO, Compound, Uniswap, and Aave have emerged, each offering various financial services such as lending, borrowing, trading, and even yield farming. These platforms operate without intermediaries, allowing anyone with an internet connection to access financial services. It's a radical departure from the traditional system, and it's changing the way we think about money. There are several hallmarks that define DeFi. First being permissionless access. Anyone can participate without needing approval from a central authority. Second, transparency. All transactions are recorded on a public ledger, ensuring accountability. Third being interoperability, which means that many DeFi protocols are designed to work together, creating an interconnected ecosystem. And fourth is censorship resistance. Decentralization means that no single entity can control or restrict access to financial services. These principles empower users by putting control in their hands, reducing reliance on centralized institutions, and fostering innovation in financial services. Now that we have laid the groundwork for what DeFi is, let's dive into the technologies that make it all possible. At the heart of DeFi is blockchain technology. Blockchains like Ethereum provide the underlying infrastructure that supports decentralized applications. These distributed ledgers are maintained by a network of nodes, ensuring that no single party controls the data. This decentralization is critical because it underpins the trust and transparency that DeFi offers. Then comes smart contracts, which are self-executing pieces of code that run on a blockchain. They automatically enforce rules and execute transactions when certain conditions are met. For example, in a lending protocol like Aave, a smart contract can automatically lock collateral and release funds based on predefined terms. This automation eliminates the need for intermediaries, reduces costs, and speeds up transactions. Then we have dApps. DeFi platforms are built as dApps or decentralized applications, which operate on blockchain networks. These applications offer a wide range of financial services without relying on traditional intermediaries. dApps can be used for trading, lending, borrowing, and more. They provide users with a direct interface to interact with the smart contracts, making the entire system more transparent and secure. Let's talk about cryptocurrencies and stablecoins. Cryptocurrencies like Bitcoin and Ethereum are foundational to DeFi. However, volatility in these assets led to the creation of stablecoins, which are cryptocurrencies pegged to stable assets like the US dollar or euro. Stablecoins such as DAI from MakerDAO or USDC play a crucial role in DeFi by providing a stable medium of exchange and store of value, which is essential for everyday financial transactions. Then comes decentralized exchanges or DEXs. DEXs like Uniswap and SushiSwap allow users to trade cryptocurrencies without a central authority. They use automated market making (AMM) protocols to facilitate trades directly between users' wallets. This model offers greater security and transparency compared to centralized exchanges, which are more prone to hacks and regulatory scrutiny. It's also important to talk about lending and borrowing protocols. Platforms like Compound and Aave have revolutionized lending and borrowing by allowing users to deposit assets and earn interest or borrow against their crypto holdings. These protocols operate entirely on smart contracts, automating the entire process and making it accessible to anyone. Yield farming and liquidity mining is another important aspect. Yield farming is a practice where users provide liquidity to DeFi protocols in exchange for rewards, often in the form of additional tokens. Liquidity mining is similar but typically involves incentivizing users to stake their assets. While these practices offer lucrative returns, they also come with risks, including impermanent loss and smart contract vulnerabilities. Here I also want to highlight interoperability solutions. Projects like Polkadot and Cosmos are working on enabling interoperability between different blockchain networks. This is also important for DeFi as it allows different protocols to interact seamlessly, creating a more integrated ecosystem. Now I want to talk about security measures. Given that DeFi operates in a decentralized, open environment, security is paramount. Audits, bug bounty programs, and decentralized insurance protocols are becoming increasingly common to protect users and funds. These measures are vital, considering the high-profile hacks and scams that have occurred in this space. Let's transition now to the practical realities of DeFi, what it looks like on the ground, and what possibilities it holds for the future of finance. DeFi is already in action, and its impact can be seen across various sectors. For instance, in lending and borrowing, protocols like Compound have enabled users to lend their crypto assets and earn interest, or borrow assets without need for a bank. This has opened up financial services to millions around the world who previously lacked access to traditional banking systems. In trading, decentralized exchanges or DEXs like Uniswap offer a way to trade cryptocurrencies without relying on a centralized intermediary. The beauty of these platforms is their transparency and reduced counterparty risk. Imagine being able to trade without having to trust a third party with your funds. That's the promise of DEXs. So what are the practical possibilities? Looking ahead, DeFi has potential to revolutionize financial systems globally. In emerging markets where traditional banking infrastructure is often lacking, DeFi can provide access to financial services through a mobile device. With just an internet connection and a crypto wallet, individuals can participate in global finance, whether it's saving money, getting a loan, or investing. Tokenization and decentralized autonomous organizations (DAOs) are paving the way for new economic models. DAOs, for instance, allow communities to govern and manage resources collectively, bypassing traditional hierarchical structures. This could lead to more democratized and transparent business models. With DeFi, geographic boundaries become irrelevant. Imagine a global marketplace where individuals lend, borrow, and trade assets directly with one another, with trust ensured by cryptographic protocols rather than centralized institutions. The future of finance may well be programmable. With smart contracts and automated protocols, money can be programmed to move based on predefined rules. This opens up possibilities for conditional payments, automated saving, and real-time financial adjustments based on market conditions. Despite its promise, DeFi faces significant challenges. Scalability is a major issue. Blockchain networks, particularly Ethereum, have struggled with high transaction fees and slow processing times during periods of high demand. Efforts are underway to address these issues through solutions like Ethereum 2.0 and Layer 2 scaling solutions. Security is another critical concern. The open nature of DeFi means that vulnerabilities in smart contracts can be exploited. High-profile hacks and scams have resulted in millions of dollars in losses, which has raised questions about the maturity of the technology and the need for robust auditing and risk management practices. Regulatory uncertainty also looms large. As governments and financial institutions grapple with the implications of decentralized finance, evolving regulations could impact how these systems operate. The challenge is to strike a balance between fostering innovation and protecting consumers. For developers and entrepreneurs, DeFi offers a wealth of opportunities. The space is still in its early stages, which means there is plenty of room for innovation. Developers can contribute by building more secure, scalable, and user-friendly DeFi protocols. Entrepreneurs here have the chance to create new business models that leverage decentralized finance to serve underbanked populations or create novel financial products. For instance, consider decentralized insurance platforms. Traditional insurance often relies on centralized models that can be slow and expensive. DeFi-based insurance platforms built on smart contracts can offer faster claims processing, lower premiums, and greater transparency. Similarly, microfinance through DeFi can empower small businesses in emerging markets by providing access to capital without the bureaucratic hurdles of traditional banks. Let's explore how DeFi is poised to impact the global financial ecosystem. Traditional finance has long been dominated by centralized institutions that control access, pricing, and risk. DeFi disrupts this model by democratizing access to financial services. With decentralized protocols, anyone with an internet connection can participate in lending, borrowing, trading, and investing. One of the most significant benefits of DeFi is its potential to promote financial inclusion. In many parts of the world, especially in emerging markets, millions of people remain unbanked. DeFi offers a way to access essential financial services without relying on traditional banks. This could lead to increased economic empowerment and a reduction in poverty. DeFi platforms often have lower fees than traditional financial services, thanks to the elimination of intermediaries. Furthermore, the transparency of blockchain technology means that all transactions are publicly verifiable. This level of openness can reduce fraud, improve trust, and foster a more competitive financial landscape. The emergence of DAOs, or decentralized autonomous organizations, represents a radical shift in how organizations can be governed. In a DAO, decision-making power is distributed among all stakeholders, often using token-based voting mechanisms. This model can lead to a more democratic and transparent management of resources, which is especially appealing in an increasingly interconnected world. DeFi is set to disrupt traditional financial models. A report by PwC suggests that blockchain technology could add $1.76 trillion to the global economy by 2030, largely through efficiencies in financial services. As more institutions and governments explore DeFi solutions, the potential for economic transformation is enormous. Despite its potential, widespread adoption of DeFi is not without hurdles. As mentioned earlier, scalability and security issues remain significant. Additionally, regulatory uncertainty poses risks. Governments around the world are figuring out how to regulate decentralized systems, and inconsistent policies can hinder adoption. Addressing these challenges require a concerted effort from the community, which includes developers, regulators, and users alike must collaborate to create robust, secure, and compliant systems. For those of you looking to dive into DeFi, whether as developers, investors, or entrepreneurs, here are some practical tips. Before diving in, take time to learn the fundamentals of blockchain technology and decentralized finance. There are plenty of free resources, online courses, and communities dedicated to DeFi. Understanding the basics is crucial to navigating this complex landscape. And if you're considering to learn about decentralized exchanges and lending protocols like Uniswap or Compound through investment, then start small. It's better than risking large amounts of capital. And then make sure to diversify your portfolio to mitigate risk. Beside that, there are other ways to learn, through joining forums or social media groups and attending virtual meetups focused on DeFi. The insights from active community members can be invaluable. Platforms like Reddit or Discord channels and other social media platforms can be excellent places to exchange ideas and stay updated on trends. It's also important to familiarize yourself with the risks inherent in DeFi. Smart contract vulnerabilities, impermanent loss, regulatory uncertainties, and market volatility. Knowledge of these risks allow you to make informed decisions and adopt appropriate risk management strategies. Security should be your top priority. Use hardware wallets, enable two-factor authentication, and always double-check smart contract addresses before interacting with them. Regularly review security audits of the platforms you use and never share your private keys. As governments around the world begin to regulate decentralized finance, staying informed about these changes is crucial. Regulatory developments can significantly impact market conditions and the operational aspects of DeFi platforms. If you are a developer, consider contributing to open source DeFi projects or building your own decentralized application. Practical experience is invaluable, and the skills you develop can position you at the forefront of this technological revolution. For investors and entrepreneurs, it may be wise to consult with financial advisors or legal experts specializing in cryptocurrency and blockchain technology. Their expertise can help you navigate the regulatory landscape and make sound investment decisions. Keep an eye on metrics such as total value locked (TVL) in DeFi protocols, trading volumes, and adoption rates. These indicators can provide insights into the health and potential growth of the ecosystem. By following these strategies, you will be better equipped to navigate the DeFi landscape and leverage its opportunities while minimizing risks. The goal is not only to understand the technology, but also to use it to build a more inclusive and transparent financial future. As we look to the future, it's clear that DeFi is more than just a passing trend. It's a fundamental shift in how financial systems operate. Let's explore some future possibilities. Over the next few years, we can expect DeFi to move from niche applications to mainstream adoption. As scalability and security issues are resolved through technological advancements such as Ethereum 2.0 and Layer 2 solutions, more individuals and institutions will begin to trust and use DeFi platforms. Rather than completely replacing traditional finance, DeFi is likely to integrate with existing systems. Hybrid models may emerge where conventional banks leverage decentralized technologies to offer better services, reduce costs, and improve transparency. We might see collaborations where banks use blockchain for settlements or incorporate tokenization for asset management. Beyond lending, borrowing, and trading, DeFi could revolutionize other areas of finance. Imagine decentralized insurance platforms that offer faster claims processing and lower premiums, or digital identity solutions that provide secure, self-sovereign identities for users worldwide. Decentralized autonomous organizations, or DAOs, are poised to evolve into more sophisticated governance models. As more stakeholders participate, we could see DAOs become standard structures for managing not only DeFi projects but also other decentralized platforms. This could lead to more democratic and transparent organizational models in various sectors. One of the most promising aspects of DeFi is its potential to empower the unbanked and underbanked populations around the world. With just a smartphone and an internet connection, individuals in remote or underserved regions can access financial services. This shift could have profound impacts on global economic inequality, enabling broader financial inclusion and growth. The future of DeFi will also be shaped by technological innovations. Advances in cryptography, cross-chain interoperability, and AI-driven smart contract audits will further enhance the security and efficiency of decentralized systems. New blockchain protocols and consensus mechanisms may emerge, offering improved performance and sustainability. While regulatory uncertainty remains a challenge, we can expect a gradual maturation of the regulatory environment around DeFi. As governments and international bodies establish clearer frameworks, compliance will become easier, encouraging more robust and secure development practices. These possibilities illustrate a future where decentralized finance not only transforms how we manage money, but also contributes to a more equitable and efficient global financial system. It's an exciting time to be involved in DeFi, as the innovations we see today will lay the groundwork for a radically different financial landscape tomorrow. Let's wrap up our discussion with some key takeaways from today's episode. Decentralized finance is reshaping the global financial system by leveraging blockchain technology to create open, transparent, and permissionless financial services. It's about shifting power from centralized institutions to the people. We also discussed the essential components of DeFi, including blockchain, smart contracts, cryptocurrencies, stable coins, decentralized exchanges, lending protocols, yield farming, NFTs, DAOs, interoperability, distributed storage, privacy, and tokenization. Each of these elements contributes to a robust, innovative, and inclusive financial ecosystem. While DeFi presents immense opportunities such as financial inclusion, cost efficiency, and new governance models, it also faces significant challenges like scalability, security, and regulatory uncertainty. Overcoming these hurdles is key to unlocking its full potential. The future of DeFi is bright, with mainstream adoption, integration with traditional finance, expanded use cases, evolution of governance models, and technological innovations on the horizon. These trends promise to democratize finance and drive global economic growth. For those interested in DeFi, whether you are a developer, entrepreneur, or investor, the journey starts with continuous learning, starting small, engaging with communities, understanding risks, and staying informed about regulatory changes. By understanding these concepts and taking proactive steps, you can position yourself to harness the power of DeFi and contribute to shaping a more inclusive and transparent financial future. Thank you for joining me on this comprehensive exploration of decentralized finance. Today, we peeled back the layers of DeFi, from its foundational technologies and current applications to the challenges it faces and the promising future ahead. Whether you are completely new to the concept or a seasoned professional, I hope this episode has provided you with some valuable insights into how DeFi is not just a technological innovation, but a transformative movement that could redefine global finance. The journey of DeFi is a testament to the power of innovation and the drive to democratize access to financial services. It also reminds us that technology, when built on principles of transparency, inclusivity, and security, can be a force for good. The future of money is evolving, and as we navigate this digital frontier, staying informed and adaptable is more important than ever. As we conclude, I encourage you to reflect on how these decentralized systems might impact your world, whether it is through new investment opportunities, improved financial services, or even broader societal changes. Thank you for tuning in to the Change Dude podcast. If you enjoyed this episode, please subscribe, leave a review, and share your thoughts with us. Your support is what makes this journey possible. Until next time, keep learning, keep innovating, and keep building a future that's inclusive, transparent, and empowering. I'm your host, Saeed Rafe, signing off. Have a great day and see you in the next episode.